All right, so get ready to dive into the world of real estate.
Yeah.
Because today we're talking about building wealth through property.
Mm-hmm.
And you know what? We're not just skimming the surface here.
Right.
We're going deep on three specific strategies:
Okay.
renting, flipping, and REITs.
All right.
Have you ever dreamt of swapping your 9 to 5 for life as a landlord?
Mm-hmm.
Or maybe you're more the buy, renovate, sell type.
Yeah.
Or perhaps a hands-off approach is more your style.
Sure.
Well, we've got you covered because,
Let's be real.
go on.
Real estate isn't a one-size-fits-all kind of deal.
Sure.
It's about finding the strategy that aligns with your goals,
Right.
your risk tolerance, and maybe even your personality.
You read my mind.
Uh-huh.
Okay.
Oh.
So let's kick things off with what's often considered the most traditional path, becoming a landlord.
Right.
Now, we've all heard those stories about rental properties being cash cows, right?
Mm-hmm.
But how does that actually work in the real world?
Well,
What are the hidden costs and challenges lurking beneath the surface?
yeah. So the key to profitable renting lies in understanding something called rental yield.
Okay.
Essentially, it's about figuring out how much profit you can squeeze out of a property
Okay.
compared to how much it costs you.
I see.
And one of the biggest factors influencing rental yield is, you guessed it,
Let me guess.
location.
Location.
Exactly.
Right, because a swanky apartment downtown is going to command a much different price
Right.
than a cozy bungalow in the suburbs.
Exactly. And it goes beyond just the neighborhood. Think about things like proximity to good schools, public transportation,
Yeah.
even parks and restaurants.
Oh, wow.
Those little extras can make a huge difference in what tenants are willing to pay.
That makes sense.
In fact, you can even use online tools like rental property calculators
Oh, really?
to get a sense of potential rental yields in different areas before you even consider buying. Talk about informed decision-making, right?
That's a great tip.
Yeah.
I am all about having the inside scoop.
Mm-hmm.
But let's be real. Being a landlord isn't just about collecting rent checks every month, is it?
You're absolutely right.
What are those hidden costs we hear so much about?
There's a lot more to it than meets the eye.
Right.
Sure, you've got your mortgage payments, but
Yeah.
don't forget about property taxes, which can vary wildly depending on where you are.
Yeah, that's true.
Then there's insurance, maintenance costs, because things are bound to break eventually,
Of course.
and even the potential for those dreaded vacant periods when you're not generating any income,
Yeah.
but still have bills to pay.
Ugh, the worst.
Exactly.
So with all those factors in play, how does rental income actually translate into building wealth over time? Because that's the ultimate goal, right?
Absolutely. Let's break it down with a hypothetical scenario.
Okay.
Imagine you snag a property for, say, $300,000. And after factoring in all those expenses we just discussed, your monthly outlay averages around $1,500. Now, if you can secure a tenant willing to pay $2,500 per month,
Okay.
that's a cool $1,000 profit or $12,000 annually. Over time, that steady stream of income really adds up.
I see. So that's the cash flow side of things.
Exactly.
But you're also building equity as you pay down your mortgage, right?
You got it.
That's like forced savings almost.
And here's where things get even more interesting.
Okay.
Remember that term appreciation we mentioned earlier?
I think so.
It basically means your property's value increases over time.
Right.
Even a modest appreciation rate of, say, 3% per year on your $300,000 property translates to an additional $9,000 gain annually.
Wow. So you've got the steady rental income, the equity building, and the potential cherry on top of appreciation.
Right.
It sounds like with rental properties, patience can really pay off.
It really can.
But you know me, I can't resist a good adrenaline rush.
Uh-huh.
So let's talk about a strategy that's a bit more fast-paced.
Okay.
Okay, buckle up.
Yeah.
Because now we are diving into the fast-paced world of house flipping, where the potential profits are as big as the risks.
That's right.
You're basically a real estate magician, turning those fixer-uppers into dream homes. Am I right?
That's the general idea.
Yeah,
But like
but,
any good magic trick, it requires skill precision and a little bit of market savvy.
So no pulling rabbits out of hats then.
Right.
More like spotting those diamond-in-the-rough properties that others might overlook.
Yeah.
What's the secret sauce for finding those hidden gems?
Well, it's about training your eye to see potential beyond the surface, peeling back the layers, and envisioning what a property could become with the right touch.
Oh?
Think outdated kitchens, leaky faucets.
Yeah.
Those are all opportunities to add value.
So you're saying a fresh coat of paint And some modern fixtures can go a long way.
Absolutely. But it's not just about aesthetics.
Oh, right.
You need to be strategic about your renovations,
Mm-hmm.
focusing on what will appeal to buyers in that specific market. A thorough inspection before you buy is crucial.
Yeah.
Because the last thing you want is to uncover hidden problems that blow your budget.
That makes sense.
Right.
You're basically playing detective and project manager all rolled into one.
Mm-hmm.
But even with the best renovation skills,
Yeah.
doesn't timing the market play a huge role in flipping success?
Timing is everything in the flipping game. You want to buy low, renovate efficiently, and then sell high, which ideally means catching the market during a hot streak. When demand is high and buyers are eager, those renovated properties tend to fly off the virtual shelves.
Okay.
Yeah.
But what happens if the market takes a downturn while you're mid-flip? That sounds like a recipe for disaster.
It's definitely a risk flippers have to be prepared for. If prices are dropping and buyers are scarce, holding onto a property for too long can eat into your profits.
Right.
So staying informed about market trends and being prepared to adjust your strategy is key.
So it's all about balancing that need for speed with a healthy dose of caution and market awareness.
Exactly.
Flipping sounds exhilarating, but I can see how it wouldn't be for the faint of heart.
It's not.
Now, what about those of us who prefer a more hands-off approach to real estate,
Right.
but still want a piece of the action? That's where REITs come in, right?
Exactly. REITs are... Okay.
Real estate investment trusts offer a way to tap into the real estate market without actually owning physical properties. Think of it like this. You're essentially pooling your money with other investors to buy income-producing properties like shopping malls, apartment complexes, even those massive data centers we hear so much about.
So it's like being a landlord, but without the late-night calls about a leaky faucet. Sign me up.
Exactly.
So besides the hands-off approach, what are some of the other perks of going the REIT route?
Well, liquidity is a big one.
Okay.
Unlike traditional real estate where selling a property can take months, REITs are traded on stock exchanges, just like stocks. This means you can buy and sell shares with ease, giving you more flexibility. That makes sense. And I imagine diversification is another major plus.
Absolutely.
Instead of putting all your eggs in one basket with a single property, you're spreading your risk across a whole portfolio of real estate assets.
You're catching on quickly. With REITs, you can diversify across various real estate sectors, like residential, commercial, and even those niche markets like healthcare facilities. This helps mitigate risk and potentially boost returns.
Okay, so REITs offer liquidity, diversification.
Yes.
And they're managed by professionals.
That's right.
But are they still subject to market fluctuations just like stocks?
They are, but here's the key difference. REITs are designed to generate income from real estate. They're legally required to distribute a significant portion of their profits to shareholders as dividends. So you're potentially getting that steady income stream.
Okay.
Much like you would with rental properties, but without the landlord headaches.
That's a win-win in my book. Now, how do you go about choosing the right REITs to invest in?
Right.
It's not like they're all created equal.
Right. Definitely not. It's crucial to do your due diligence, just like choosing individual stocks. You want to research the REIT's portfolio. What types of properties do they own? What's their track record of dividend payments? Are they financially healthy and well managed? These are all critical factors to consider.
So it's about looking beyond the surface and really understanding the underlying assets and the management team behind the REIT.
Exactly.
Now, before we wrap up, I'm curious from your perspective, what's the most important thing for someone new to real estate to keep in mind when deciding which strategy is right for them?
That's a great question.
It's about connecting your own personal financial goals to the strategy that best fits your lifestyle.
Exactly.
Because being a landlord requires a certain level of hands-on involvement, while flipping demands expertise in renovation and market trends. And then there's the more passive approach of REITs, where diversification and professional management take center stage.
Precisely. It's about finding that sweet spot. Where your risk tolerance, financial capacity, and desired level of involvement all align. For someone who thrives on bringing a vision to life and isn't afraid of a little risk flipping might be a perfect fit. But for those seeking more passive income and long-term growth rentals or REITs, could be more appealing.
It's like choosing an adventure, right? Are you drawn to the heart-pounding thrill of a house flip, the steady climb of building a rental empire, or the scenic thrill of REITs with their potential for both growth and income?
Exactly. And the best part is there's no right or wrong answer.
True.
Just the path that best suits your individual circumstances and goals.
So for someone who's daydreaming about real estate riches, but doesn't know where to start, what's the most important takeaway from all of this? What's the one nugget of wisdom they should carry with them?
I'd say it's this knowledge is power.
Okay.
But action is key. It's great to learn about these strategies.
Right.
But the real magic happens when you take that knowledge and apply it to your own life. Start small if you need to. Maybe dip your toes into the world of REITs.
Yeah.
Or explore rental properties in your area.
I love that it's about taking those first steps, even if they seem small, because they can lead to incredible journeys.
Exactly.
Now, speaking of journeys, let's bring this back to you listening in.
Okay.
If you were to dive headfirst into the real estate world, what type of property or location would pique your interest the most? What calls to your inner investor?
Would you seek out a charming historic property in a bustling city center, envisioning it as your flagship rental? Or perhaps a fixer-upper in a quiet suburb where you can unleash your inner renovation guru? Or maybe you're drawn to the stability and potential of a diversified REIT portfolio, spanning everything from bustling shopping centers to cutting-edge tech hubs?
That's something to ponder, isn't it?
Is.
And as you're mulling over your real estate aspirations, remember this. You don't have to have all the answers right away. The journey itself is a learning experience. And every step you take brings you closer to your goals.
Absolutely. And remember, real estate is more than just bricks and mortar. It's about building wealth, creating opportunities, and securing your financial future. So embrace the learning process, ask questions, and most importantly, never stop exploring the possibilities.
Couldn't have said it better myself.
Yeah.
From rental properties and daring flips to the exciting world of REITs, we've covered it all.
We have.
And as you navigate your own real estate adventures, remember, we're here to guide you every step of the way.
That's right.
Until next time, happy investing.